But gold is your thermometer to tell if the patient is sick or not, the patient being the dollar.
What about JP Morgan's recent report coming out saying that Bitcoin is in fact hurting gold right now? We've seen, tremendous inflows in Bitcoin ETFs and major outflows out of gold ETFs.
Yeah, the gold Bitcoin comparison is a straw man. It doesn't mean anything. That's typical Wall Street research, which I pretty much ignore. I look at good research, but I don't put Wall Street in that category. Here's the thing. Bitcoin and gold are both going up because of concerns because of loss of confidence in the dollar. So I don't see a Bitcoin gold trade-off. I mean, first of all, the numbers don't add up. The total market cap, I understand that Bitcoin in percentage terms has had a great run in 2020. It's gone from about $9,000 to $20,000. That's a 100% increase. I get that, but the entire market cap of Bitcoin, if you took all the Bitcoins in the world times $20,000, it's not that much. It's certainly tiny compared to gold, and gold is tiny compared to the foreign exchange market. So there's no. It's not like a zero-sum game and people are getting out of gold and they're going into Bitcoin. That's not happening. What is happening is that people are getting into gold and into Bitcoin at the same time because they want to get out of the dollar.
Jim, you've written numerous best-selling books. In all of them, you've had some sort of forecast or prediction, which unfortunately has panned out. I guess you could say, unfortunately. So I want to take a recent synopsis or tweet you put out. COVID will fade, and not soon, but eventually. The economy will recover, not quickly, but it will slowly recover. What will not fade soon is the new depression. The effects will be intergenerational. This is the topic about on your new book, The New Great Depression. Tell us about it.
Well, I'm happy to, and thanks for the invitation. By the way, I don't usually do stuff on camera. It's called stage business, but I just happen to have a copy of the book.
It's my first time seeing it.
Yes, thank you. It's The New Great Depression, Winners and Losers in a Post-Pandemic World. The official publication date is January 12th. It's available for pre-order now on Amazon, Barnes & Noble, and Powell's and other sources. But you're right, Danielle. In my last book, Aftermath, came out in July 2019. If you look at pages 280 to 295 in that book, I talk about a pandemic and a couple other events. And I say there's a 100% chance that one of them will happen in the next 3 years, and pandemic is on the list. And then I said that will lead to social disorder, riots in the streets, and armed forces, whether it's militias or U.S. National Guard in the streets. So nothing happened in 2020 that you weren't warned about in 2019 in my last book. In my new book, it's the same thing. I just take the story forward. So we're in a depression. Depression does not mean continuous declining GDP. It means depressed growth. We'll get growth, but it will be below trend, even worse than the 2009 to 2019 expansion, maybe growth of 1.7%. But right now, right this minute, we're going into a second recession. Recessions are technically defined 2 consecutive quarters of declining GDP. So we had a recession from February to July 2020. We came out of that recession because we had very strong growth in the third quarter, but now we're going back into a second recession, the first back-to-back recession since 1980, 1981. And the reason is obvious, which is we're going back into lockdowns. There's another coronavirus outbreak. By fatalities and daily case reports, it's worse than March and April. If you say, well, look back at March and April, how horrible it was. Well, it's worse than that right now. It's the interesting thing about the book, Danielle. It'll be the first book, and so far the only book, that wrestles with the pandemic and the economic outlook. Doctors are going to write books about the pandemic. Economists will eventually get around to writing books about the economic state of affairs, although economists tend to prefer papers to books. But this book tackles both head on and draws the linkages between them. And the main linkage, say, well, here's the pandemic, here's the depression. What's the link between the two of them? The answer is it's the lockdown. Lockdowns don't work. They're unnecessary. There are things you can do. There are better things you can do that are more effective and less expensive, but that's not what the politicians want. But we're in a new lockdown right now, so you're going to get a new recession. This is one of the easiest forecasts I've ever done. First quarter of 2021, you're going to have a recession. These stocks are going to back off. Don't worry about inflation. You should be more concerned about deflation, which is coming. And gold will do very well in that environment because of the political and economic uncertainty. And also, we're going to get declining interest rates. So lower interest rates is a tailwind for gold. Political uncertainty is a tailwind for gold. So gold should do very well starting now going into 2021.
So to that point, Jim, would you be out of U.S. equities now, and would you be buying more gold? And if so, how much should someone allocate to their portfolio?
Yeah, the worst thing you can do in any asset class is go all in on anything. Diversification is the key. Most people don't understand diversification. They think if they own 30 stocks in 10 sectors, they're diversified. And I say, no, you're not. You've got one asset class, okay, and they're highly correlated. So I wouldn't get all out of equity. I would lighten up on equities. I would increase my allocation to cash because cash reduces volatility in your portfolio. And I would absolutely have 10% of investable assets in gold, silver, or gold mining shares. Now, some people say, well, Jim, if that's the way you feel, why not go all in? Why not 50%? You know, but that's up to you. I don't recommend those kind of high percentages. You don't need them. If I'm right about the price of gold going to $10,000 to $15,000 an ounce in the coming years, 10% allocation is going to do just fine. Now, that's going to save your portfolio.
Just getting back to your point, and we can wrap on this good quote of yours here, Jim, of your book, blending and the economic with the medical aspect.
Right.
I just wanted to take one quote where you say the destruction of over 4 trillion in asset value and the loss of 2 trillion in economic output was the cost of the lockdown. The doctors exceeded their authority and the politicians failed to stop them.
Correct.
Ouch. So you don't put words in this.
That's a pretty good assessment. Because so you got guys like Anthony Fauci. He's the head of immunology of the CDC, Centers for Disease Control, and he's just like a near 80-year-old bureaucrat, swamp creature who's been around forever. He's held out as this prominent immunologist. He's not that good. There are prominent immunologists. You can find them at Rockefeller University or Stanford or elsewhere, but not in the U.S. government. So he's a guy who said, "Don't wear masks," and he said, "Wear masks," and he said, "We'll get through this. Oh, it's really bad." So he's just a bureaucrat. And he likes to say, well, we don't determine economic policy. We're just doctors. We're just giving advice. That's not true. They took over the economy. Now, I fault President Trump for allowing that. Trump did a lot of things right, but that was one of the big things he did wrong. He put the doctors in charge of the economy, and doctors complain, and I'm going to get this criticism on my book. I can see it coming. Well, hey, Jim, you're not an immunologist. What do you know about medicine? Well, I turn around to the immunologist and say, what do you know about the economy? The answer is nothing. The old saying, Danielle, if you're a hammer, everything looks like a nail. If you're an immunologist, everything looks like a lockdown.